Hey, traders. Welcome back to LutaMarkets. Today, we'll be diving into how the upcoming 2024 US election might impact the Forex market. We'll take a close look at how the US dollar index, DXY, has reacted in previous elections and, more importantly, how you as a trader can prepare for the uncertainty that lies ahead. Let's get into it. Historically, US elections have always triggered volatility in the Forex market. Whether it's the 2016 Trump victory, which sent the dollar on a wild ride, or the 2020 Biden win, where we saw uncertainty in the lead-up affecting currency strength. Traders need to understand that major events like this don't just impact the US dollar, they affect global Forex pairs, including the euro, pound, and yen. As we can see in this chart, US elections have historically triggered significant volatility in the US dollar index. Let's break it down year by year. 2004, George W. Bush's re-election. Looking at the chart, the dollar showed a strong downward trend throughout Bush's first term, reflecting weakness due to geopolitical concerns like the Iraq War and rising fiscal deficits. However, leading up to his re-election in 2004, there was a brief consolidation phase, and post-election, the dollar weakened further before stabilizing slightly in 2005. This matches the broader concern over the growing deficit but indicates that the dollar weakened more significantly than previously stated, rather than showing much strength. 2008, Barack Obama's victory. On the chart, the US dollar index shows a major reversal in 2008. Contrary to the previous explanation, the dollar was actually gaining strength leading up to and shortly after Obama's election in November 2008. This was a period of global financial turmoil, and investors sought safety in the US dollar, which led to a rise in its value. The dollar began to reverse its gains in 2009, shortly after Obama took office, as the Federal Reserve initiated large-scale quantitative easing to combat the economic crisis. This period saw the dollar weaken as confidence in the recovery started to grow. 2016, Donald Trump's victory. The chart confirms that the US dollar surged after Trump's victory in November 2016, driven by optimism over his promises of tax cuts and pro-growth policies. This rally continued through the early part of 2017. However, as trade wars with China began to escalate, volatility spiked, and the dollar experienced periods of weakness as concerns over global economic uncertainty grew. 2020, Joe Biden's victory. In the lead-up to Biden's election, the US dollar had been weakening, primarily due to the COVID-19 pandemic and expectations of large stimulus measures. This matches the original explanation. However, after his victory, the chart shows that the dollar actually reversed its course and strengthened throughout early 2021. This reversal was driven by improving economic conditions and rising U.S. Treasury yields, as well as optimism over vaccine rollouts and the subsequent economic recovery. These historical trends show us one thing: elections bring heightened volatility to the DXY, and we can expect similar movements for the upcoming 2024 election. In this election, the outcome will shape economic policies that directly influence the value of the U.S. dollar. For instance, Kamala Harris is expected to continue promoting social spending programs and international trade agreements, which may boost market confidence in the U.S. economy. Meanwhile, Donald Trump's focus on domestic industries and potential for protectionist trade policies could spark volatility in global markets. These policy differences will be critical in determining market sentiment after November. During these periods of heightened volatility, certain Forex pairs are particularly sensitive to U.S. dollar movements. Let's highlight some key pairs. Euro to US dollar tends to see sharp moves due to its inverse relationship with the US dollar. Historically, election uncertainty leads to short-term declines in this pair, but clarity on US policies can cause trend reversals. Pound sterling to US dollar is similarly impacted, but Brexit factors add an additional layer of volatility here. US dollar to Japanese yen often becomes a safe haven pair, with the yen strengthening during periods of US political uncertainty. Expect liquidity to tighten, spreads to widen, and volatility to spike for these pairs as we approach election night and the weeks following. My final advice? Stay flexible, keep your risk management tight, and don't let FOMO, fear of missing out, drive your decisions. The US election is a big event, but there will be plenty of trading opportunities, so there's no need to rush in. Stay patient, stick to your strategy, and ride the volatility smartly. Thanks for watching LutaMarkets. If you found this video useful, make sure to like, subscribe, and hit that notification bell. Comment below with your own election trading strategies, and as always, trade smart and stay sharp.